Hey everyone, we got some massive news for supermicrocomputer stock investors as the management team elaborated on key strategic initiatives, the growth drivers, and what supermicrocomputer investors can expect from the company later this year. So I'll go over each of those in detail here in this video and elaborate on management's comments on those factors. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So starting with how Supermicrocomputer is supporting its growth. They're going to support their growth, they said, with short and long-term growth with minimal equity dilution. You noticed in recent months, they made two stock sales, two equity sales, and that had the impact of diluting shareholders. So I think it's prudent here for management to reassure investors that they're going to try to keep that to a minimum, the shareholder dilution to a minimum. Because remember, when they dilute shareholders or when they add new shares, it splits existing profit among more shares. So it has the impact of reducing the earnings per share. You don't want to do that too often. Unless, of course, you feel that the money that you're raising from the stock sale is going to result in more net income. And then even after you split it among more shares, it's still going to increase the earnings per share. And with the supreme rates of growth that Supermicrocomputer is experiencing right now, that's what management felt recently. Like, look, our stock price has exploded. We have really strong growth opportunities. Cash is a problem for us because our cash flow from operations is turning negative, which, by the way, I'll remind you, happens sometimes when a company experiences rapid growth. The cash flow from operations turns negative because you're spending money on the products and services before you're getting paid. And that's even more so when you're growing at the rates that Supermicrocomputer is growing 200% revenue growth in the latest quarter. So it's spending money on those products, delivering it to their customers, and then the customers, Supermicrocomputer is giving them, let's say, 30, 60, 90 days to pay them back. So they're not getting the cash. They're making the sales, but they're not getting the cash for some time while they're spending the money up front. So they need cash, and that's why they're going to need to sell shares, and they're telling investors, we're going to try and keep that under control, and we're not going to do it too much. We're going to try to keep it at a minimum. But still, management is optimistic that AI growth will continue for many quarters, if not many years to come. And many quarters, I feel it's a given, considering everything I've heard from, I cover dozens of tech companies. Many of them are spending on artificial intelligence, and many of them have said that they're increasing spending this year and to expect next year they're going to spend more than this year. So at least 2 years, 2024 and 2025, seems like already locked in for great growth in artificial intelligence, and Supermicrocomputer will benefit. Now, beyond 2026 or beyond 2025 and into 2026 remains to be seen what the rate of growth is. Now, some estimates suggest that the AI industry will grow from around 200 billion in 2023 up to 1.8 trillion by 2030. That's really big growth. The bulk of that growth, I suspect, will happen in 2024 and 2025. And then from then onwards, the rate of growth will slow down as many of the companies' initial rush will kind of slow down. Okay, that's my expectation on the AI industry. So one of the reasons Supermicrocomputer is gaining traction among customers is their optimized direct liquid cooling solutions for high-end cloud service providers. Now, with these newer GPUs reaching 700 watts, and soon they're going to reach more than 1000 watts, efficiently managing the heat from these AI systems has become critical for customers, especially at these new data centers. So that's making Supermicrocomputers' products and services, the liquid cooling, even more valuable. And then to add on to that, not only are these GPUs consuming more power, but the price of power is increasing as power is becoming in short supply, right? You're having this huge surge on demand for power coming from these new data centers with the large language models. Training and inference is requiring more data consumption, more power generation. And then at the same time, you're trying to have this push for electric vehicles, which is also creating increased demand for power. And so all of that is increasing the price for power. The price per kilowatt hour is increasing in many regions around the world, in the US especially. So the need for these liquid solutions, the liquid cooling solutions, is growing. And the management team here expects that will continue going forward because it reduces the expense of cooling and it saves data center space and allows the company to allocate a greater portion of their finite power resources to computing instead of cooling. So this will drive continued demand for Supermicrocomputers' liquid cooling solution. So I highlighted in the beginning of the video what investors can expect from Supermicrocomputer throughout this year. One thing is continued growth. Management said that even though in the latest quarter they increased revenue by 200%, they could have increased revenue even more if they were not limited by some component shortages. They could have delivered even more revenue growth. So you can expect some of that to come in over the next few quarters as the supply chain is improving. They did also highlight that they are improving, and they did receive a big shipment of inventory towards the end of the quarter. And now they're going to be able to utilize that and deliver on some of the companies and some of their clients they were not able to deliver on. And then for the rest of the year, management saying that you can expect the operating margin and net income to both improve because they're going to see further benefits as they bring their Malaysia facility online later this calendar year. They have been investing in increasing capacity, and the more they invest in this capacity, and as revenue continues to surge, they're going to benefit from economies in scale, and their profit margin and net income is likely to continue improving. That is, of course, demand remains robust as it has been. And like we discussed earlier, for 2024 and 2025, it's very likely that demand will remain robust for Supermicrocomputer. Now, beyond that is when most analysts on Wall Street expect a slowdown in the rate of growth. So it's not that Supermicrocomputer will shoot up here and then come crashing back down in 2026. That's not what the analysts on Wall Street are expecting. They're expecting Supermicrocomputer will shoot up in terms of revenue growth for 2024 and 2025, and then stabilize from there on out at a slower growth rate, instead of shooting up and shooting back down or just going straight up for several years. This is just going to be an initial boost for the next 2 years and then relatively stable growth from there on out. So that's what investors can expect from Supermicrocomputer in 2024 and beyond. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.